Meantime, moving on to Netflix, shares sinking on news the company cut subscription prices in more than 36 countries. According to a Wall Street Journal report, the cuts apply to certain tiers and in some cases have the cost of membership. The changes will not affect U.S. customers, but comes as Netflix cracks down on password sharing and increased competition. And you have to wonder, I mean, it's a lot of countries. We don't know, if they're cutting prices in Croatia, is that going to be meaningful to them in the long run?
We know Vietnam, Indonesia, Thailand, Philippines, the Asian countries are their lowest revenue, less than half of the United States. So that's going to be less important. But as a message, I mean, that's concerning, not just for them, but of course for every streamer as well. And maybe that's, I don't know if that's why they're doing it or they feel like they need to just in a bubble, regardless of what the competition.
Yeah, 55% of the sales do come from outside the U.S. and Canada. And I think to Mel's point, I mean, they're going to be figuring out different ways to kind of crack down on the password sharing. And maybe it's just easier than that, rather than create an ad-supported model and all this other stuff that it takes to do it, maybe just cut prices and you kind of retain a certain amount of those customers. So I'm sure they're thinking about it and using a lot of data to figure out correctly. I was surprised at the magnitude in which the stock was down on that headline today without putting any numbers to it.
Yeah. Another member of the 100% club having rallied 100% from the lows we saw. In the case of Netflix, that whole period of time, spring and the last summer. So now I have to ask, where am I getting back into stock? Because it actually ran more than I thought it would, but it topped out at levels we sort of broke down from back in April, if you want to go back and look. 280 is the right number. Now, people say it's never going to get back there. You know what? Don't say never in this stock market because weird things happen all the time. But if this stock were to get back down to 280, 285, it makes a lot of sense. Again, back in terms of valuation and where we sort of had the next leg higher from a few months ago.
Yeah, Julie, do you think this is a sign of bad, maybe slowing growth, et cetera, or was this just a case of this is an excuse to sell off a big run-up?
I think it's the latter, actually. I mean, look, price is a really powerful indicator that we use to understand the health of the business, right? But the thing about Netflix is they have this ridiculously high budget for production. And so every incremental subscriber they can grab is meaningful to them from a profit perspective, right? They have to pay for the studios regardless. So there's a very strong incentive for them to do that. And if you look at the way where they took the cuts, it's mostly on their basic plans. Their premium plans didn't change pricing that much. So I think what they're trying to do is grab an incremental customer. I don't even think it's a question of trying to save customers at the low end. I really think they're just trying to make their market as large as possible. It's just a classic land grab. It makes sense, but I wouldn't like it if I were a shareholder.